Great, thank you. And could you talk us through our options when it comes to premiums?
Yeah, fantastic. So the different types of premiums that are currently available in the market. So you've got your variable premium. So that's going to be starting a lot higher than your variable age stepped premium. And I've got a bit of an example here I might just show us shortly. The other difference between them, so not only does it have a higher starting point, but it also is typically structured around your entry age into the contract for the most part. So that initial level of cover is based on your entry into the contract. The other thing that's quite interesting is that you won't have any premium increases on that initial sum insured because of a change in your age. So that's kind of one of the benefits. However, as I mentioned, there is that higher initial cost. A variable age step premium is typically priced on your current age. Premiums increase as you age. So as you become a higher risk to the insurer, the prices and the premiums will go up. However, they do often start off a lot more affordable than those variable premiums. So I've just got a quick example here on screen. I'll just have a quick look and show you what that looks like. So if we have a quick look at this scenario, we've got $1.5 million worth of cover, and we have a male that's age 45, paying through direct debit and or credit card. So when we have a quick look at this scenario here, what we can see is the variable age stepped premium here is going to be starting at $61.33 per month. The variable premium here is, in this scenario, is $391.23, right? So it's a big difference in the pricing compared to variable age stepped. And for a lot of customers, that's just not palatable, and that's totally understandable. What you'll also see is that as we've projected out the premiums, this is on what we know today, not locked in guaranteed, but what we'll see today is that if you were to keep this policy indexed, so you'll see as we are working through here, we're indexing the cover at 3% each year. So here again, you don't need to opt into this indexation. So if you were to remove indexation from your policy, the pricing would remain more stable. However, on a variable age stepped, it's always going to be going up anyway. But I just wanted to kind of illustrate to you. So on a variable age step, in this particular scenario, you might have been up until age 65, paid a total of $193,704 in premiums, whereas on a variable premium might have been $185,018. So as you can imagine, a lot of customers would be looking at those variable premiums at the moment. They are structured quite highly. So a lot of people might not go with that option and may want to consider the variable age stepped. And then as they get older, reducing that sum insured on the variable age stepped to really help mitigate that, I suppose, stepping up of that premium as they get older.